Guys, welcome back to DeFi, Degens, Drip, and Farm for Poverty, where on this channel, our vision is to empower the impoverished by helping you find financial freedom through crypto assets. Please subscribe and leave a comment and a thumbs up. Hey guys, welcome back. DeFi, Degens, Drip, and Farm for Poverty. So in today's video, I'm going to show you how this 326% increase is 100% legit and very likely if these things actually take place. So in this video, we're going to explore who this single-handed investor is and how they are the most influential asset manager in the world and touch literally every part of the economy globally, and how the tailwind is already shaping up to see this actually take place. We're just waiting on a couple more dominoes to fall, and this is 100% possible in the cards. Don't know if it'll be this year, but definitely very soon. So we are super early. So what is this about? Well, it's about BlackRock. And if you're not familiar with who BlackRock is, they are basically the world's largest asset manager with more than $10 trillion under management. You can look them up on Wikipedia. There's tons of great articles and information on them, but they've been around forever, and they have teamed up with Coinbase. So we're going to listen to first a report from this news article that I was reading on the Daily Hodl, and it talks about BlackRock Coinbase deal could trigger Bitcoin to burst to $773,000. That is the more bullish scenario. The one I just laid out in the thumbnail is a much more realistic and probable scenario, but we just don't know when. So Coinbase announced that it teamed up with BlackRock, and let's take a listen to some information about who BlackRock is after I actually tell you about this regulation that comes into play that is super important for BlackRock to actually take part in this undertaking. So let's play this from the article.
Not dwell on that at all. Let's jump into this first piece. The CFTC is going to most probably at this stage regulate Bitcoin, which means Bitcoin will be a commodity, Ethereum too, and that could free up billions of dollars per Max Gottlieb year. And this is basically a handful of US senators are looking to empower the CFTC to regulate Bitcoin and Ethereum, and that would deem they are the two largest cryptocurrencies by market cap, and it could free up billions of dollars to flow into this space, which is very exciting. But that's kind of the beginning of the story today. Next part is this, which came out 2 or 3 days ago. BlackRock was teaming up with Coinbase, and it's funny because I think poor Kathy Wood, she sold Coinbase at $53, and within 2 or 3 days it went up to $95. So talk about nailing the bottom, but the wrong way. No, never sell at the bottom, Kathy. Come on. Anyway, BlackRock partners with Coinbase. BlackRock teams up with Coinbase in crypto market expansion, basically help their clients oversee their Bitcoin exposure, and Coinbase, SEC Probe, etc. But this is very, very important because we'll talk more about how Bitcoin operate in a second, but they manage a lot of money. We'll talk about that too. They help a whole bunch of companies, treasuries, high net worth individuals, institutions, governments, pensions.
All right, so that's for the article that I'm showing you guys here. So it's just telling you about the CFTC getting or seeking to get approval to regulate Bitcoin and ETH. And if that happens, then they are actually more pro-crypto than the SEC. And if it's labeled a commodity, which is what this bill is being pushed towards, that gives the red light for investors all over, not only in the US, but globally, to start investing in Bitcoin and Ethereum. And BlackRock is the largest single asset manager in the world. They manage $10 trillion. But more importantly, they actually have created a portfolio management software that handles twice as much. So I'm going to play a clip from Coin Bureau about their software that their portfolio management software that other institutions use to determine what assets to buy, when to sell, and all that. And that is owned by BlackRock. So even their competitors are paying to use their software. This company is huge, but let's just play this real quick.
It's just the tip of the iceberg. That's because BlackRock has not only made a name for itself through its index funds, it's also developed an institutional investing platform that is the backbone of the asset management system. a, quote, central nervous system that's relied upon by nearly every billion-dollar capital allocator. This is BlackRock's Asset, Liability, Debt and Derivative Investment Network, or Aladdin for short, and props to whoever came up with a name that makes such a fine acronym too. Aladdin is a system that had its beginnings not long after BlackRock was first launched. It was initially developed as a time-saving system that BlackRock could use to automatically report on bond positions. However, it's grown over the years to become the operating system for the company itself that inhabits multiple data centers and is maintained by a group of between 1,500 and 2,000 people. Aladdin has become so integral to BlackRock's internal risk management systems that it's used by around 13,000 BlackRock employees all around the world. Now, the exact mechanics of how Aladdin works are beyond the scope of this video, but the basic MO is that it's a risk management platform that runs advanced Monte Carlo simulations, yep, I had to look those up too, to get an adequate picture of the scope of risk in a portfolio. Aladdin became so sophisticated that BlackRock saw an opportunity to start making money from competing asset managers, institutional investors, and corporates by making the platform available to them. It would also allow these investors to manage their portfolios and model the inherent risk. Now, the list of companies that use Aladdin is vast, with over 240 external clients currently relying on the platform. Companies like Google, Apple, and Microsoft use it for their corporate treasury management. The $1.5 trillion Japanese government pension fund is also a client, as well as, get this, State Street and Vanguard. That's right, BlackRock's biggest competitors are effectively paying to use BlackRock's own systems and, in the process, giving BlackRock access to reams of data about their portfolios. Data that further helps BlackRock to refine Aladdin and better model risk. So, quite simply, although these firms may manage funds separately under their own AUM, their portfolios are linked up to BlackRock systems. Talk about having an edge. To say that Aladdin is an important system in the global management of assets is an understatement. Back in 2020, it was estimated that about $21.6 trillion sits on the platform. In 2020, that would have been higher than the entire GDP of the United States. Or perhaps another comparison. If you were to empty the bank account of every one of the 7.6 billion people in the world, every single bill and coin, and place them all in a pile, it would be worth around $5 trillion. So what this means is that Aladdin has grown into a system that is responsible either directly or indirectly for over 4 times the value of all the money in the world. Now,
all right, so let that sink in of how big this company is and why this number I threw out is not clickbait. It's 100% realistic, and they currently don't really have any exposure to Bitcoin because they are an American company. Technically, they're global, but they were founded in America and they have branches all over the world, but there's no regulation in crypto yet, and that's what a lot of institutional capital is waiting. It's waiting for that regulation, and as I showed you, that's coming soon. So let's get into the numbers of where this actually comes from, and thankfully this guy already did it. So this is saying if BlackRock decided to allocate 0.5% of their assets under management, less than 1%, that is $50 billion that they could allocate. And obviously, they would put most of that towards the one single asset that they know is going to appreciate and is limited in supply. They could technically gobble up some ETH, and then they would have definitely control of the stake of ETH since they're going to a proof of stake network. But let's just assume it's all going to Bitcoin, and that would pump the price to $98,000, a 326% from the existing price. This is saying at 1%, it would go to 173,000, and at 5% at 773,000. And in the video, they talk about this could actually take place over time, so it doesn't have to happen immediately, but this could happen relatively quickly. Now, here's the other interesting fact. There is only 35 billion in circulation of Bitcoin on the exchanges. So BlackRock could essentially gobble up every single bit of circulating Bitcoin in supply right now. Now, obviously that can't happen because the minute they start buying in batches, it's going to impact the price, and then it's going to impact the price on other exchanges. But if they were able to do it right now, circulating on a supply and exchanges across all of them as of 7 days ago, it's 35 billion. They have 50 billion that they can allocate with just a 0.5% allocation of their portfolio. That is insane. And if they do that, then obviously other investor capital will start to do that as well. Talk about following the whales. This is the whale to follow. So if BlackRock starts buying up Bitcoin, that will definitely signal the new bull market. Nobody knows when it will happen, but guarantee it will be on the cusp of some kind of regulatory information happening with the CFTC. And that could be later on this year. There's definitely a push right now with the Senate for that to happen, but It's in the near future. So the point being is that we are super early, and everyone knows that what Bitcoin does, every single other altcoin follows. So if Bitcoin pumps by 326%, the other alts will pump usually more than this, but that's why I just use that number of 326%. So that would put BNB at $1,000, and Drip would pump, a lot more than that. So this is huge, huge, guys. So keep your eyes and ears to the streets on this. You will definitely hear about it. This is relatively new. So yeah, do with it what you will. But the point I'm getting at is now is the time to build your bags, because if somebody like this starts getting in the game, you are too late. And they're looking at it now, which means you can't afford to miss this opportunity in whatever part of the DeFi crypto space you want to play in, because when the big boys put their toe in, it's all over. And you can see how big impact that this can have. 0.5% can just utterly just blow up the market. And they're just going to be signaling for everyone else to jump in. So we will see. But always like, subscribe, turn on notifications, all that stuff. Join the No Sell August campaign. We're holding steady at $8. And participate in the scavenger hunt by donating to the wallet. And of course, lift daily and achieve your impossible. Hot Alpha. See you later.